Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny Bert, the Dividend Diplomats. We have two stocks that are in my portfolio and Lanny's portfolio that just popped off the radar as potential stocks to buy as I was reviewing my portfolio over the weekend. So we're going to talk about those two companies. We're going to peel back the layers a little bit on their earnings release, balance sheet metrics, and most importantly, we're going to run them through the Dividend Diplomats Dividend Stock Screener in this video today.
Smash that subscribe button. Give Bert, the Hurt, and I a nice thumbs up, guys. Two stocks that Bert's like, hey, we don't talk about them often enough. One stock we have featured on some previous videos because of a major acquisition that they are about to close on and go through. It's going to be big news to their big branded portfolio, guys. Everything is big here on this channel. If you haven't caught my drip. Oh, and in time for the holidays, Bert's rocking a nice Dividend Diplomat sweatshirt. I've got a nice Dividend Diplomat coffee mug, guys. Get you and your loved ones and your investing friends some swag so you can, wish them a very nice holiday season, plus get them to kickstart their dividend investing journey in 2024. Two stocks, both start with the same initial letter, Bert. I can't wait to hear.
Yeah, the market's been causing some pain for us lately, Lanny. It's been great for the portfolio, but terrible for us as we continue our journey to find those undervalued dividend stocks to buy. It's not the same market we had 2 months ago when it seemed like it was much easier to find those discounts.
Oh man, you just wish you had, obviously, like we all do, all the money in the world to buy all of the undervalued dividend growth stocks back a couple months ago. But
Yeah.
S&P 500 is up over 19% this year in 2023. Definitely stay true with what history shows, that it's very difficult for the S&P 500 to be down in back-to-back years. So
That's right.
2022 they were down, 2020 to 23
Also
not down even close.
no. Yeah, we're the ones that are down in 2023 is what I meant to say with that. So these two companies, they're in the food sector. Let's jump right in. This first company is Smucker's, ticker symbol SJM. And this is the one that had the big acquisition. Smucker's, we talked about it several months ago, is acquiring Hostess. And that's what's actually pretty interesting. We know them for the peanut butter, for the jelly, for the coffee, but the Hostess is really what pushed them into the snack food sector, which is a completely different play on the grocery store and the consumer staple, which Smuckers love. Market didn't react that well to the acquisition, and that's what's been dragging down Smucker's stock.
Yeah, typically, obviously, to acquire somebody, usually you're overpaying. And then in their industry, it's not like they're so flush with cash. So, there could be some, debt and all of that involved, which could hamper growth going forward. But there could be some synergies. Obviously, that's why they do these deals, because they can right size the employee count. They could use different centers to create and make, their goods, obviously their baked goods, Uncrustables, and now with the Hostess branded,
Yep.
Twinkies and the Ho Hos maybe or something.
Yeah, all the great stuff that's perfectly healthy for you. And I also thought it was interesting too, as they announced a new business segment. It was called the sweet baked snacks sector. So they're really leaning heavy into the snack food sector, which is a very interesting thing. So they're not just doing with the Hostess acquisition, they're going to start building their own variation on this too. That's what's interesting. So Smucker, it's been a little bit of time since Smuckers has posted earnings. They're getting ready to announce earnings here on December 5th. So this video is about a week or so ahead of the company releasing earnings. Last quarter, they beat on the earnings, they beat on the bottom line, but they missed on revenue. They missed it by about 4%. So we'll see what's in store here for Smuckers. Not terrible misses. They still produced a billions of dollars revenue. So it's not as if they just didn't earn anything. They just didn't quite hit what the market was expecting. From a balance sheet side, current ratio is 1.28x, quick ratio is 0.72x. So when you back out that inventory is when it falls below that 1x mark that we love to see.
But hey, that's okay. It's kind of expected in their industry because they're very much inventory based, and zero point 0.7 is not the worst,
No.
right? For the quick ratio, and happy to see it over 0.5, right?
Yeah, it's just going to be hard if they have to liquidate all that peanut butter.
All those, yeah, that peanut butter, that jelly, that Cafe Bustelo,
Yeah.
all that good stuff over there. That Folgers coffee. I know you guys have seen in your office
Oh, yes.
probably all day long, guys.
Yeah.
And not to mention the Dunkin' store brands. Keep in mind that if you're buying Dunkin' in the store, good old Smuckers has their hand on that as well.
That's right. So let's run them through our screener. We're going to run them through the three metrics and that bonus metric here. That first metric, the PE ratio, Smucker's price is 113.27. Forward earnings are 10.59. That's a PE ratio of 10.70, less than half than the S&P 500.
Hmm. Extremely low, guys. Extremely low payout ratio for the name of Smuckers, SJM. But let's get into that dividend. Paying $4.24 for the year, spread out obviously over 4 quarters. That's a 40% dividend payout ratio for
Hmm.
Smuckers.
Love it. Love it. On the very low end of our perfect payout ratio range, it's between 40 to 60% there. They're on the verge of becoming a dividend aristocrat. They've increased for 23 years and they have a 5% 5-year dividend growth rate. Dividend growth hasn't been the highest of late in the consumer staples. And knowing this acquisition with Hostess and what it did to some of the debt and the cash outflow going, I wouldn't expect Smuckers to start announcing 10% plus dividend increases for the next few years or so until this acquisition starts producing those synergies and the cash flow that's expected.
Pretty wild, guys. But, we'll have to really pay attention in the next year or two of that dividend growth, as Bert just indicated. But with them coming down, though, down to the 113.27, that yield has popped to 3.74%, guys. And to give it just a quick frame of reference, over the last 5 years, on average, Smucker's yield actually has been only 3.09%. So them yielding 3.74%, 65 basis points higher, 20% higher than their 5-year average is what they're yielding right now.
Absolutely wild, right? So that's Smucker's,
Good.
everybody. Very solid metrics, 10.7 PE, 40% payout, 23 years of increase in dividend, 5% dividend growth rate, and 3.74% dividend yield. Smucker's number one. Lanny, should we talk about that second dividend stock here?
Bert, I don't know. The question is are you guys ready watching this? Smash like the video, guys, because we're talking about the Nash, the Spartan Nash SPTN, because this stock is back down in the low 20s, 22.40 a share. Because similar to Smuckers, this stock is getting Randy Orton RKO'd right now in the stock market, down over 27% for Spartan Nash.
Yeah, what was Kevin Nash's finisher? Was it the power bomb?
It was the power bomb.
Yeah, I feel like that's the appropriate one here. They're getting power bombed by big Kevin Nash. Yeah, so what's happened here? Let's look at their last earnings. Let's dive into the numbers. Revenue's down. It was 2.26 billion, down 2% compared to the last year. Interestingly though, net earnings were up compared to the last year. It was 11.1. Gross profit margin remained flat compared to last year. So even though revenue decreased, profit margin remained the same and earnings went up. That meant SpartanNash has done a great job of controlling their costs and reducing and trimming the fat where they can to help keep the bottom line up while the top line's coming down.
Okay. Okay. All
Yeah,
right,
that's what's
Spartan.
interesting about it.
Interesting. Obviously, the beauty is the industry that they serve. They have a pretty nice reoccurring revenue stream. Spartan Nash, their contract was extended for the next few years by the U.S. Defense Agency. So they're involved in governmental contracts, which are highly favorable. And obviously, the length of those contracts are usually very nice. And obviously, the dollars that go with it.
Yeah, and that's what's nice about SpartanNash. They're not in one area. They're not just like hospitality. They're not just consumer. They're not just government. They have contracts to everybody, so that helps them diversify the revenue streams, especially if one area is pulling back. They can increase it somewhere else, or it just isn't as detrimental to their top and bottom line as it would be to one company that's just solely involved in one sector.
Oh, it's true. Oh, it's damn true. So, guys, this stock, $11 million in earnings compared to 9.5 million the prior year. Gross profit pretty flat. But the big thing is the current ratio that I like right now from Spartan Bert.
Yeah, it's 1.5x and the quick is 0.75x too. So
Hmm.
Quick is similar to Smuckers, which we just talked about, but the current ratio of 1.5 is fantastic. So they're very liquid.
Very liquid.
Short-term
You know, they could probably dump those meals onto us consumers real quick. No, I'm kidding.
That's right. So let's see how they stack through the metrics here. Their price is 22.40. Their earnings per share is 220. You know that's a PE ratio of about 10x right there, just based on those two numbers alone. It's 10.2 PE ratio for SpartanNash.
Yeah, pretty similar to Smuckers. I'm starting to wonder how the heck you ended up getting two stocks at the PE range of about 10.
I don't know. Let's check the payout ratio and see how similar they are. Their annual dividend 0.86 gives you a payout ratio of 39.09%. Again, right in line with Smuckers at 40%. I know, it's great. Let's see, are there any other similarities? Let's keep going. Their 5-year growth rate is 3.93%, so it's a little bit lighter than Smucker's 5%. And they've only increased that dividend for 12 plus years. So they're on their way to becoming a dividend aristocrat, and they're almost about halfway to that 25 plus years of increase.
Yeah, that last increase, guys, just for frame of reference, was about 2.4%. They went up about half a penny from 21 to 25 cents. I think it's just funny when you say it like that.
Yeah, it's the Emerson Electric plan, right? Yeah.
Hopefully they don't keep that up for the next 30 years.
That's right. And their yield is 3.84%, so just 10 basis points above Smucker. So not too bad here for SpartanNash. Down 27% year to date, down 32% over the last 52 weeks.
And their 5-year average is 3.82% for the dividend yield. So they're like right there with what they traditionally yield. I think because there was a period of time, if you look back at the stock chart for SpartanNash, the last 5 years, they really hung out in this, call it 15 to 20 range for quite a few years leading into 2020. And then 2021, 2022, the stock broke out. So now they're coming back down to reality, I guess.
Yeah.
But that's why that average is so spot on with where they're currently at.
So there we have it. Smuckers, SpartanNash. Those are the two companies I'm going to be watching here. Wasn't expecting them to be on my watch list going into the weekend, but that's what's fun about doing the research and seeing where the numbers and the metrics lie when you leave the weekend. And now here we're telling you about them on Tuesday. Both metrics are looking pretty solid, and there's an argument for why if they continue to fall a little bit, and for some reason if the yields hit 4% for either of these companies, I'll definitely be grabbing one share of each. Why not? Especially SpartanNash when it's at 22.40. That's the easy one.
Wow. So you're looking at both at the 4% mark. SpartanNash could get there a lot sooner than Smuckers. Yeah, I guess we'll have to wait and see. And then, hey, maybe you guys will see that on another stock purchase video to see if it happens and what we did or what Bert did for sure on these.
That's right. So everyone, let us know what stocks you're watching here as we round out November and head into December. And let us know what stocks you've been buying and watching of late. And if you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, if you're not with us, you're against us, Jack.
That was Bert, the Hurt Man, and Lanny from the Dividend Diplomats. Over and out.